Hi, my name is Denise Appleby. I'm the IRA Whisperer, and I have an update for you. The IRS have issued the 2025 version of Form 1099-Q. This is the form that is used to report distributions from 529 plans and education savings accounts. Now, a 529 plan is a qualified tuition program. It can be a private QTP for short, or a state QTP, but QTPs nonetheless, and we collectively refer to QTPs as 529 plans. Now, you will remember, I'm saying you remember because I know you do, that Secure Act 2.0 included a provision whereby which a beneficiary of a 529 plan can roll over amounts from an eligible 529 plan to a Roth IRA. Now, the most recent Form 1099-Q before this one was published in 2019. I'm checking right now to confirm. Yes, 2019 was the most recent version before the 2025 version. So obviously, then that did not include the information for rolling a QTP to a Roth IRA. Now, if you look at the 2025 version, you'll see that it includes an option for the trustee of the 529 plan to check a box to indicate that the QTP is being moved to a Roth IRA. And one of the questions one of my clients asked me is, how will they know that it went to a Roth IRA? Remember that the QTP to Roth or the 529 to Roth has to be done as a direct transfer. Don't know why they call it that because it's reportable. Anyway, it has to be done directly from the QTP to the Roth IRA. So the trustee of the QTP is going to make the check or the funds payable to the Roth IRA custodian for benefit of the Roth IRA. So they'll know for a fact that it is a QTP to Roth transaction. You remember, a QTP to Roth can be done only if the QTP or 529 plan has been established and funded for at least 15 years at the time that when you're doing the QTP to Roth. And only amounts that have aged in the QTP for at least 5 years can be moved from the QTP to the Roth. Now, if you look at the 1099-Q, you'll see where the trustee of the QTP or 529 is required to indicate on the 1099-Q how much of the amount that is moved from the 529 to the Roth or QTP to the Roth, how much of that is attributed to basis and how much is attributed to earnings. Because remember, the whole point of this 529 to Roth is to help the beneficiary avoid having to pay income taxes on the earnings. Because if they have excess amounts left over in their 529 plan, those amounts, when they take the distribution, the earnings portion is going to be taxable. But by allowing them to move it to a Roth IRA, where when they become eligible for qualified distributions, the earnings would be taxable. I mean, tax-free. The earnings will be tax-free. That ensures that they avoid paying income taxes on the earnings portion. Of course, the maximum amount that can be moved from a 529 to a Roth is $35,000. That's a lifetime limit. And for on a per year basis, the maximum amount that can be moved is the amount of Roth IRA contribution that the individual is eligible to make, not taking into consideration the modified adjusted gross income cap that ordinarily applies to Roth IRA contribution. So if an individual has compensation, say, of $7,000, then they can make a Roth IRA contribution of $7,000. Therefore, they can do a 529 to Roth for $7,000. And the 529 to Roth, when added to their other Roth IRA contributions and their regular traditional IRA contributions, the total should not exceed the IRA contribution limit that's in effect for the year, which is $7,000 for 2025, plus a catch-up contribution of $1,000 for those who are at least age 50 by the end of the year. So if you're looking at the form right now, you'll see I did sort of I filled out a dummy form. And you'll see that in box 1, gross distribution, it's $5,200. Earnings, $200. Basis, $5,000. So this is where the trustee of the 529 plan is going to provide a breakdown of how much of the amount that is being moved as a 529 to Roth, how much of it is basis, how much of it is earnings, and that allows the IRA owner to be able to track the basis versus the earnings once the amount gets to their Roth IRA. Now, if you remember from my Roth IRA ordering rules, you'll know that the basis amount gets allocated to the regular Roth IRA contribution bucket, and the earnings gets allocated to the earnings bucket in the Roth IRA, which means that the individual can take a distribution of the $5,000 basis at any time, tax-free and penalty-free, and the earnings will be the last amount to be withdrawn if the distribution is non-qualified. If the distribution is qualified, then there's no need to track what's basis and what's earnings, because the entire distribution amount is going to be tax-free and penalty-free. I just wanted to make you aware of the fact that the form is here. And so if your client's doing a 529 to a Roth IRA, make sure that the custodian is aware that that is a transaction they're asking for, so the custodian can record it properly on their system, so that when the time comes to issue the 1099-Q, they know exactly how to report the transaction on the 1099-Q. My name is Denise Appleby, and if you have any question about this, please post it below and I'll be happy to answer your question. Thank you for listening.